Microphone check and screen share check, please. Testing 1, 2. Microphone check, screen share check. Okay. Good evening, guys. Nightly strategy podcast for July 5th, 2022. Happy birthday to my brother. Let's start with the market health check.
Thanks, my brother.
We're, except for this 5 days ago, this big sell-off, we're kind of locked in this tight little trading range, which we'll see tomorrow is a much compressed 5-day range. Right now, the 5-day range is large. Tomorrow, unless we get some kind of big move, it will be pretty tightly compressed. And today's range really encompasses all of the last 4 days in one chunk, and it's between the bottom of the dragon and the top of the dragon. So that is the definition of a sideways market right there. And we're noticing the RL10 peak and valley, it's tucked right inside there. So this has got to have to break out of this to be interesting, or break down from here, then through the 10-day low and the PSAR, and then the belly of the RL10. So there's, 4 layers of pain and suffering on that. To the upside, if it breaks out above today's range, it's breaking above the edge of the dragon. The RL10 peak is not far. Bollinger Band mean, 10-day high. And then this is really no man's land up in here. There was just that 1 day, so there's not much resistance in there really until you get up into this at around 412. So if it can break out of this zone right here, if it can break out of there, this could run north pretty fast, but it's got some work to do to get above that 10-day high, which is locking everything in and the top of the dragon. So we got work to do. That makes this a perfect zero state and a breakout in either direction. The good news was it did not fail hard today, even though it didn't follow through. Anytime you're in a bullish normal and in a critical state and it doesn't fail, I would take that as a good sign. So we will just continue to emphasize trading inside the yellow zone and making bank when we can. That's another strategy. It's the same strategy we've had for the last 10 weeks probably, but you let the market tell you what your strategy is. You let the golf course pick your club based on where the ball is. Let's take a look at the sector performance. So we have the S&P with a fractional gain today at 0.19. Let me expand that a little bit so we can see. So the S&P with a fractional gain of 0.19. The Russell and Treasuries were better at 0.8 and 0.83. The Qs were the best at 1.7. The Dow slightly underperformed at minus 0.37, and emerging markets were the worst at minus 0.78. So in our big 6 indexes, maybe a 2.5% spread between the best and the worst. It feels like sort of a normal differentiation. Let's look at the sectors in the pink here. VIX and finance underperformed at basically flat. The real estate and staples, 0.4 and 0.6. Then this cluster here of Aussie dollar, Mexico, now we're into the minus 2% range. Materials, wood, food, lumber, Brazil. So kind of like all of the inflation plays that had been gaining so much kind of gave back. Then energy at minus 4%. That slide continues. We saw how that had been a adverse 5 sigma move this weekend when we looked at the sectors. Not surprisingly, oil exploration 5.5. More surprisingly, wheat and precious metals off 5.5. Then blended commodities and oil 6.7 and 8.4%, with oil back under 100, seeing a collapse in the energy sector. Individual companies, Devon Energy, not surprising when energy's getting beat up that much. Devon Energy minus 6% roughly. Alcoa off 6%. U.S. Steel 5%. Cliff Natural Resources 3.5%. So there's our three steels and metal companies right there. That's our metals. All in a significant sell-off. And otherwise, a fairly wide-ranging set of conservative symbols that underperformed today. So let's take a look at the upside. There's the S&P today at 0.2. Lithium 0.4. Tech and clean energy 1.2 and 1.1. Staples, blended large cap crypto, Simon Property Group, the commercial real estate 2% to 2.4. The FANGs 3%. That's a big vote of confidence to the upside on the mega large caps. Blockchain 3.3. Global future of finance, and this whole cluster of the disruptors. Global future of finance, Bitcoin, biotech, Bakkt Holdings, marijuana, Arc Genomics, Arc Innovation, 9%. Oof, come storming back. And then Coinbase and Ethereum, 9 and 13% respectively. Rivian, Squarespace, and PayPal, 4.2 to 4.5. Robinhood and Tesla, 2.55. Tesla closing right at key price level of 700. Apple and Microsoft, the conventional tech, right in here with the NAS, slightly better than the S&P tech, but both of them better than the S&P. So conventional tech with a nice play today. Take a look at reports for tomorrow. Sniper trade of the day. Tesla, 3-minute. Here's the open. Big gap. It opened, raised up, and then sold off a standard risk box of about $6. Got the initial pay. SSC for about 1.5. I was committed to Tesla on the long side today. This gives me the COTA 2. That was the nice trade, so that's about 2. A second COTA 2. Because again, we got the higher lows. There's our risk box. So +1. Another COTA 2. And all I'm doing is hitting the PSAR flip using my standard risk box of $6. Committed to cutting it if it were to break below the PSAR, so I'm not even risking the full R. This is about half, and that takes us up around 3 p.m. So this was about 1, 2, 3, 4, 5, 6, maybe 6R today. Nice orderly move in Tesla from 645 to 700 plus 55. Just slightly less than a range stat move from the low of the day to the high of the day. Just under a range stat. So that's a very strong move. Very orderly after that initial sell-off to clear the deck. They're buying inventory and then selling it into strength. And then flat overnight. Nothing wrong with that. Sniper trade of the day. Let's see. Market health check already covered. Dashboard 1, still bearish normal. Better performance today with the strong close. We just tipped over into risk on, so that's a good thing. McDonald's, Walmart, Home Depot, Procter & Gamble, that's all your conservative large caps with Verizon. Alcoa, Cat, ExxonMobil, Chevron, metals and mining. All your industrials are suffering. No signals and channeling and overreaction, not a surprise. Risk Z just tips into the positive side, saying maybe there's a COTA 2 in there on volatility, which produced that run last time. So maybe we'll see that kind of plus upside move. Today was the first step in doing that. It did not fail. Just a handful of dojis, some 5DDs in Alcoa, so I'll be on the lookout for that. Caterpillar and Cisco, also 5DDs, and Caterpillar at 6-1, Alcoa at 4-1 gets my attention. The industrial company DuPont at 3.7-1 with a doji, so those will be on my short list. Tesla, big strong mover today. Sorry about that. In the ETF 30, just a couple dojis. One overreaction short signal in treasuries, which says this thing is getting, it's had a really nice run up to 116.73. So that's had a pretty nice run that may be getting overheated. Saw big breakdowns here. Brazil, gold, and Europe. Silver getting smashed again. Oil, 1 day and 10 day and 1 month breakdowns. Metals and mining, oil exploration also getting smashed. Lots of auto framers to choose from. I'll be looking at Brazil, 3-1. I'll be looking at tech as a continuation play tomorrow as well. I like both of those. No surprise, the auto framer has a lot of candidates today because of we're still in a deep well, and today's range was relatively small, so that means there's large moves back up to the 10-day high. The commodities and food and Caterpillar, Alcoa, gets my attention, as does Cliff, so I'll be on them tomorrow. Only Alcoa was in the squeeze today. I would probably add Caterpillar and U.S. Steel. When they are squeezed and they're sold off that much, I like that as a critical state ready to break. I'll be on it. Yeah, they were hard today. So sometimes they're hard. And I'll be on them tomorrow. I'm looking at U.S. Steel has a 9-to-1. It's 9 ATRs below its long-term fair value. So I like that. Looking at the sniper categories now. A good number of Godzillas in the S&P 500. These are all raging Godzillas because they're all greater than 1.0. CE had a big move today, and it was really the only one that had a big move, greater than 1. All these other ones are really kind of quiet. I like how Caterpillar is setting up, though. It's a Godzilla. It's had a big 5-day move, but a very quiet 1-day move. So that could be the doji at the end of a Godzilla setup, and that implies a potential for an upward move. Advanced Micro Devices, also a very quiet day. I like that one. And there's DuPont. So all Godzillas. In our tactical symbol set, only Global Future of Finance and Bitcoin. Both extremely quiet, 5-day and 1-day. So it's the abnormal volatility in this case is what makes the Godzilla move. So when it has sold off so harshly, but then has had a 5-day compression and a 1-day compression, that tells you it's had 5 days to fail further, but it didn't. So that may be this. Some fireworks. All of them are in a absence of volatility, except for General Mills, which is still working on a 5-day large move. Some fence sitters. American Expedition or Outfitters. Wow, that's interesting. Big day today, as was D. So when these things are stuck in their, inside their middle of the road trading range, and there's a large move to the peak or to the valley, and then you get a 1-day breakout, which is what you see here, then that may mean that there's room for that move back to the top. Or if it was a breakdown, that first breakdown out of the middle suggests that there may be a move that way. So I would be interested in looking at both of those. I'd leave it to you for the quiets based on the 5 days and the volatiles based on the 5 days. I like the quiets that had a large move today, but I don't really see any, with the exception of MCK, had 1 day. Everything else was really, really quiet today on 1 day. Among the really volatile ones, I like then seeing a corresponding small, quiet move like today. That's sort of a consolidation. And Walgreens was in a Godzilla move previously. It just ticked out of Godzilla with a little upward move today. So this may have some quiet room to move. Hewlett Packard, very interesting, very volatile 5-day and 1 day, and is still mostly in the bottom of his range. So that looks like something that could go on the long side. Yep. The sniper and auto framer setups there for all your framing needs. And then your all your sniper stats here, sorted by the 5-day volatility. Treasuries, very large move today. Simon Property Group, Wheaton Precious Metals at a very large move today. And that's getting close to Godzilla territory there. Excuse me. Always interesting when VIX is the least volatile of them all. A sleepy, quiet, complacent market. Staples, Microsoft, real estate. This is some of your value plays and defensive sectors down in here. The index is telling you where the extremes were. Devon Energy and U.S. Steel getting collapsed. Lots of big downward moves here. And a handful of the usual suspects. This is actually a pretty healthy sign right here. When tech, small caps, and the S&P all have a strong 2-day move, that's not bad. And then this is some of your defensive plays here. That looks like a tip towards the long side, and upward moves are being hinted at. So I'll continue to be an opportunist in the bear market. Ready to chase the rabbit whichever way it goes. This has that little Kata 2 feel to it. Maybe to the far side of the river, around 412. That's a tradable move. Before it hits resistance here. It's about a $15 move. And, the RL10 slope has pulled back to long-term average. This would be a nice place for it to get a Kata 2. The 30 and the 90 are by no means overheated. That's at -2 sigma, and this is -3 sigma. That's how bad that move is. But with the 10 not really showing weakness and just coming off a nice run, this feels like this could be the potential. Wouldn't be surprised. The last time we kind of saw that move was in here and around in here. So, and maybe even right there where you had higher lows. So, yeah, I could see this getting to 412 pretty easily. All right, let's go to the charts for swing trades of the day. Here was Microsoft. These are all 3 minutes. There's your gap of the day. Harsh sell-off down to the bottom of the RL10. I just play the standard PSAR flip with standard risk box. If that breaks, I'm going to be short. If the RL10 breaks, I'll be double short. If this works, it has to get through this resistance level before this is really very interesting. So this is a tactical opportunity here on that much risk. So that's about 1, 2 before it gets up into the genuine resistance. And then I have planned a scenario for the downside. Check or hold. So standard SSC. This gapped down and sold off, but it didn't really fail out of that box. Not much. It gave me a little bit of a tease. I mean, it sold off a little bit. I was committed to staying with it. It gave me something. It came back, and talk about a yin-yang ride. That wasn't very good on my part, but was happy to get out of that with nothing. But I'm still noticing, in spite of the very volatile individual bars, we're getting a very orderly move and a strong bottom. That almost feels like some Kata 2 happening. And then this little formation in the RL10 showing some support. So that feels like there's some upward pressure, and this could still work in my favor. So we get a fraction. A little fractional gain there. I'm committed to the long side, so here's a Kata 2. PSAR flip. Standard wrist box. I'm going to execute on the collapsing dragon at the bottom of the RL10 though, so I'm really only risking this much. Check or hold. But this is where I would go short if I were going to play the short side trade. There was a legitimate short side trade here if I was playing the short side with a standard risk, which would have, maybe had a fraction, so I missed that one. Micro pay. Micro pay. Kata 2. Check or hold. Now where I'm noticing is if we can get above this, then this is going to become interesting. Scratch. Rats. Kata 2. Just keep staying with it. Doesn't really follow through much, and by this point it's been grinding so much that I didn't want to wait for it to come back and hit here. I just took it on the rejection of this breakout. So it tried and then came back. I just said, let me just take it there and get paid a little bit more, maybe +1. Kata 2, because why not? And now this actually feels better, because now it didn't, after making this first test, and then the pullback was not very much, and it breaks out right away. Now I'm feeling pretty good. So that's when I should be like that to make sure I lock in this. Standard exit. So we get that piece. And that was it. late in the afternoon. So if we're running the numbers on this one, scratch, 0.5, scratch, 1, 1. So maybe 2.5 the hard way. Microsoft. And that feels good because it was better than the S&P and better than tech today. So here is ARE. That's the Alexandria Real Estate. That's the healthcare real estate company that was a Godzilla, and we just been trading it, and it just keeps working intraday. Here's a here's where it closed yesterday, Friday. Big gap down, sells off a standard risk box below the PSAR flip, so I buy it here with a standard risk box. Check or hold? Or short it with the standard risk box, I should say. And so this one, by this time I should be like right about here, and lock in, should be locking in that gain. Yeah, we do that all the time, Bill. Just stack. I like to just stack MMRB so I know where I am in the R multiple ladder. Because when you're using the R10, there's no reason not to do that. Because it will remind you what the size of the move is. So if you've got a range stat move, and if you're using the R10 ladder, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And if the thing had opened and sold off and is starting to reverse, and you end up getting an entry here because your pattern was hit, and you have that as your standard risk box, knowing that if this fails, you're going to go short on a CD. Well, now you know that you have potential of 9 to the upside. So if you got +1 or +2R in hand and it's still going, you can then just quickly say, hey, I've still got a potential for 6. So if I put a second position on somewhere around here where I've got 2R in hand, and if I can quickly get that one to no lose plus dinner for 2, then I still got almost 5 on 2 positions. And the key on that is not to believe in that second position so that you give back a full R, because if you put that second position on here, and then you let it come back a full 1R, you just destroyed the 2R that the first position earned. Yeah, Jack, because we were in oversold conditions, it was a huge gap down and there was nothing selling off, and tech was leading the way, and it's all morning hook. The upside move was the path of maximum pain for everybody that's looking at the short. And there were so many indicators of good things, like the disruptors were all working today. So when energy's getting smashed and XLY is better than XLP and everything at the top of the stack is in the green, it feels like big gap down, rapid sell-off, and an upward move. So I'm just going to commit to the long side for the first couple hours. So standard play. And then when I do that, I only have to think about one direction. I give back. I missed the short side trades, but that pattern happens so much that we were already at an extreme low on the 10-day range. I mean, we were in the bottom, but it had 4 days to fail further, and it didn't. So that felt like there was a reasonable upside move available. And if it started to fail fast, then I can switch my orientation to the short side because you're seeing collapsing dragons all over the place. But if you don't see that happening right away, and there's a big gap down, I always feel like, well, that's just they're playing games and they're going to reverse it. So I take that orientation. So anyway, back to my brother's question here. So if I've got my first position on and I put the second one on somewhere around +2, I have to make sure that my stop on that second position is very tight and that I get that in the money very fast, because I don't want I don't want my enthusiasm for the second position and the potential for +5 to make me stay in that too long, and then all I got to do is lose 1R on 2 positions, and then all the money that I made on that first position is gone. So you can use that R stat and your R10 stack plus a simple R10 MMRB as a way to rapidly figure how much room is left. And that's why usually around the 2R battle drill, what I'm looking at is, how did it get to 2R? Is that thing just going and the market is cruising? I mean, if it is, then I'm inclined to do that. If this thing just is going, then that second one's easy to put on. But if the whole market is just grinding its way up, no second position for me. That's the kind of day it was today. Was just sort of a grind. There was a big gap down and then just upward grinding slowly. So I'm rarely putting 2 on. That second position I normally have, I will not tolerate more than a half of a MMRB adverse move against me, right? So anyway, so meanwhile, we're back to this little rascal. So there was the PSAR flip. It moved a full box in this direction, so I get the short. It moves quickly. I should be locking in, that much gain as I'm watching to see what it's going to do. Now, this is one where if I've got my wits about me, big gap down, harsh sell-off, and failing, that's a place where if I was going to put a second position on, that would kind of make sense because I have a buffer of money that I've already made. And the downside's usually better. I missed it. This thing runs all the way down to here and then runs back up. And that's a case where it moves a full wrist box off the bottom and back up. Now, if I'd had the second position on, you have to exit here so that second position would be in the money. But that's a pretty good move right there. So that's about 1, 2, 3, and gave back 1. So at one point it was +4 and then settled for +3. So that's keeping 3/4 of the move. That's about 75% capture of the available. Does that make sense? And now we almost have what looks like a little Kata 2 action happening here. RL10 peaks, a dip, and it continues to go. And now the PSAR has plummeted, and then there's going to be my entry with a standard risk box about like that. Looking for this. But also, if this fails, then I'll be collapsing dragon. Micro gain. Feels like another SSC. Standard risk. It's got to get above this to be very interesting. So this is the tactical trade space. Became interesting. I was happy to, get about 2 on that one with a orderly exit. And now we've got some, we're well into the day. Kind of got this, caught a 2. Here's the risk box. Micro gain. Caught a 2 again. Standard risk. Climbing the wall of worry. Oh my. So this is what can happen with some of those, middle of the pack S&P 500 companies that are not, huge attractors for index money. And this thing gave me everything I wanted. It started to decay in here. 1, 2, 3, 4. This time the peak was down, so this felt like all of that wobbling looks different than all of this gain. I mean, that's just strong engine and going. Now you can see it's starting to get sideways, to get choppy, lower high. The RL10 rolls over. That's a good exit right there. So there's 1 unit of risk, 1, 2R to the upside. And that's, the afternoon trade. So that's a pretty good day in ARE. And I'm going to be back again on that one tomorrow. So this one got about 1, 2, 3. Scratch, probably 1, 2, a half. So if that's 3, 2, and 3, this is probably plus 8. That should have been the trade of the day. ARE, a healthcare real estate company, for crying out loud. This is his running buddy Peak. This is also a healthcare real estate. Same pattern, same harsh sell-off. There's your PSAR flip. There's your big risk box off the top. Standard short. By this way, halfway through, I got to be locked in on that much gain. Now it's starting to, now you can see it's starting to not run away fail, but sort of grind downward. So I like to tighten up the stop a little bit at that point and start, locking in more and more pieces, maybe something like that. And then that same orderly exit. This one actually felt weaker than ARE because it didn't rebound as strongly. And whereas ARE went right up to the PSAR and then went, this thing kind of failed and starting to drift. So this is not as strong as ARE. So in in our world of relative strength, ARE is better than peak on the long side. So that's almost like a pair trade. But I tried the SSC. Now this one didn't work, whereas ARE worked right away. So I'm now ready to play this one short because it was not as good, because ARE was working, but this one wasn't, and it had just broken through the belly of that, and I can see that. Now that's one I'm willing to take short. Check or hold. And there's your PSAR flip. Micro gain. SSC, standard risk. About half an hour, or micro gain. So again, not as strong as ARE was. See how it's taken longer for the Kata 2s to unfold? Still worth a try. Nothing. Kata 2 one more time. Pretty good, but not as good as that one in ARE was. So this one gets 2, whereas ARE I think got 3 on that leg. And now we're getting close to the end of the day, so there's nothing left. So still pretty good, not as good as ARE, but still worth carrying forward into tomorrow as a continuation. Here's Alcoa. I tried, here's the big gap, PSAR flip, big gap down. It peaks here. There's a standard risk box on them, about 50 cents. Get this one, 1, 2, 3. So make about 1. Missed the short on this one. Should have been on this one and then scratched it. But now it gives me the SSC, and I'm looking for that with a standard risk box. Fail. Should have been short. Still committed to the long side. Standard risk. Failed to fail further. So I'm looking at that as an SSC. Fail. It failed to fail all the way through here. PSAR flip, standard risk. Come on, Alcoa. Fail. I decided not to take that one. Didn't matter. And by that time, all the healthcare guys were working, and this one was basically a scratch for the day. Whatever I made on the first piece was just frittered away, making sawdust. Alcoa just was not in the mood today. Now, on the other hand, this failure to fail further feels almost like a really strong base. And then there's that gap that has to fill. So tomorrow I would not be surprised to see it kind of treat that as a critical state and then emerge from that and then run back to this price level. There's a move in there, and then any failure out of this will be a nice trade to the downside. So that's on my short list. Cliff, this was kind of the same thing. Big gap down, started failing right away. Short, maybe 1R. SSC, loss. SSC, or COTA 2. PSAR flip, let's go. Fail. Re-enter on the COTA 2. Let's go. Standard risk. Fail. COTA 2. Micro gain. I'm still feeling this as a COTA 2, so if this is going to come down and break out, I'm still going to try it. Fail. I wanted that one, but I said, you know what? This is so close to here, and it's failed 1, 2, 3, 4 times. I'm just not going to take that one because it doesn't feel correct. Of course, that's the one that works. Not much, but it did work a little bit. So there just wasn't anything there on Cliff or Alcoa. But again, I'm taking the longer term view on this one and saying that this whole price complex in here feels like one giant support level where it never failed. It didn't fail any further. So if it breaks out above here, then first target would be back to here, which could be tradable tomorrow. Last one, oil, USO. Big gap down. Here's your OR3. It moves 1.5 wrist boxes off that, so I hold my nose. Let's try it. Scratch. SSC. Standard risk. This is where I got to get short on a CD, but I'm willing to risk that. Fail. Stop and reverse. Standard risk. Energy is starting to suffer as a whole sector now by this time in the morning. Got paid. Span of control, missed the second one here. When this, and again, I've been lecturing you guys all week and I didn't take my own medicine. This little pattern right here, this immediate fail, that should have been the second position. Covered the first one, SSC. Let's go. Fail. Reverse short. Micro gain. SSC. Let's go. Standard risk. Micro. I think, I'm trying to remember if I did one more. Nope, that was it for the day. So really maybe 2 good chunks on that one. This was a good chunk. That one wasn't bad. Couple are. Maybe 3 on this one. 3 and 1. So maybe a total of 4. Don't front run at all. Just follow the rules. because the MMRB is so small, there's not really a need to front run. All right, let's check and see the traders today. Yeah, this is Paul on Alcoa. Yeah, Alcoa was just hard today. Um, this was that I was prepared to trade from that gap. It opened, rolled up, and then started falling. That's where I ended up getting that first trade in the bank. I like that short and a cover. I like this re-entry. We might have been here, but still that's pretty good. And then pretty good exit. A nice effort again. And these are both fine. There just wasn't much there. So we got the only difference was being prepared right from the get-go. But Alcoa is one of my, top 5 trading partners for the last 25 years. So I'm always ready to trade that right from the open. Tim worked back into E-minis instead of oil, to his regret today, I think. Let's see. Tries it short, covers. Tries it short again. So 2 quick losses. A pretty good SSC. So he's conditioned. He doesn't want to stick around too long. It had 4 bars to work, and it didn't. So he cuts it, but he gets back in. Might have got a little bit more, but that's a pretty good 1, 2, 3 exit. Good patience on the short. You got what was there. The SSC, you got it. Got the re-entry twice. This one might have been a little slow, as he points out. I'd have still tried this one at the VWAP. Then this is a good short, a good reversal. So now his timing is a little better, and he should be on this one. Wait to be not satisfied until after the day. And then that sense of frustration brought you in on this one. And so not much there available today. It was still kind of a choppy market and some work to do on the frustrations. Aussie. Let's see here. So this is Arch. I like the PSAR flip short. We should at least be getting out of this with a scratch, or not later than here, because this is where the entry is on the long side. So we can't stick around longer than the stop and reversal entry, because then we end up being late on that, and then we give back too much. So this nets out to minus 0.5, and we should be at least getting paid and then getting some of that. We should be plus 0.5 instead of minus 0.5. This little recovery here should be here rather than here. That's the peak. 1, 2. I think I want to get paid there. If I'm here, I want to get paid here. If I'm long from here, I got to get short there instead of losing. Great stop and reverse. This one was right on time and got paid. This is a good shot. Good exit. I think you could be short here. It would have scratched or something. I think you could 1, 2, 3 this right here. And then we got to get out of that at a scratch. After being this far to the upside, we waited until the short entry to get out. and ate the whole 1 hour loss after being up half an hour. But we did get paid. And then this is where our long should be, with a stop like that instead of here. Then this would pay you instead of losing. So there are 4 or 5 that would improve this and would get you to about +2. Luke on the 5-minute Aussie. A lot of grinding here, but he's quick on the draw. That's a 0.8. Quick loss, 0.7, but we gave back almost 1.0. That's a full 1R. Got paid a little bit. Good short, good effort on the short, good quick scratch, good stop and reverse. He did get paid finally. I like this rollover and trying it here. I might have gotten long here. And then that would be a scratch or a micro loss. They all look the same leaving the station. That's why you keep firing. And when this Z3 breaks down, you get this second position, you get this third position and covered. So that 6 could have been 10. This and notice that this is that line that he has from his higher time frame. So when this thing is trying to get long and it can't, and then fails below, that's a sign that that thing cracked. It could not break, so now it's this way, and that's where you get those great big moves. That you want to be ready for the second and third positions there. That's where that higher time frame can help you. Woj, nice work in here. Perfect. There's your 1, 2, 3 collapsing dragon. Bang. We might have gotten a second one here and here. But that's a really good exit. So nothing wrong with 5 for crying out loud. We missed this one and that one because we were out. And then just grinding. Still, we came out of it with fine colors. Nice work on Devon. I should say a little unnice work. Maybe a little too much grinding in here. But that just comes with experience. To be ready to trade that one from the open is tough. You got to be a dedicated Devon trader. I think with that size of a gap and the harsh sell-off, I don't think I want to try those until I see the energy complex itself turn. Conversely, this is a nice one in Tesla. So this one, Tesla gets affected by big money a lot more than Devon Energy does, which is a relatively small member of the S&P 500. That is a strong sign of support, as is that one, and he's getting paid on those big bounces, so that's good. And we know that the metals were hard today, but I'm still looking at this as a base of support for tomorrow's rebound or tomorrow's collapse. My happy birthday, brother. This should be, I think, a long and an exit here. Stop and reverse. Second position. Cash is 3.5. PSAR flip, gets 2 on quick and an exit, 1 back on for a scratch. Tries it one more time, nothing. PSAR flip, it doesn't work, so now he's ready to get this one with 2 quick. Pretty nice work, buddy. 8.7. Crushed me on that one. All right, that's everything we got for the day. Happy birthday, Bill. And we'll be ready for him again tomorrow.
Yep. This was pretty much all I traded today, too. So, because I was working on class